What is going on, guys? It is your boy R Saba back again with the next video of Charts and News, episode 3. So today's crazy, like I predicted, like I've been telling you, because charts are right and news is not. Fundamentals don't put human emotion into play. Technicals do, and as you can see, the market's been red for the past 3 days, and that is because I've been telling you. However, this is a weekly chart. We're looking at the weekly chart for the Dow Jones Industrial Average here. We're going to hop right into this. And it's currently fighting a key level of possible support, previous resistance. It was support here. It's a key level. And I'm honestly not going to be surprised if we see some green in the next day or two, because there's going to be pullback. If you look at RSIs on basically any chart besides the daily, weekly, or monthly, it's oversold. So 4 hours showing oversold, 3 hour, 2 hour, 1 hour, 30-minute, 15-minute charts, they're all showing oversold territory. So we're going to see what happens. But, I mean, there's still a lot of downside to go. If we see green, it's just going to be a bit of pullback. It's probably going to go like this. Up, and then right back down. That's what I'm expecting to happen. But we'll see. So one hot stock right now that everyone's looking at is Tesla. See it in a falling wedge pattern. So what I think is going to happen here, obviously, even on the daily, the RSI is showing that Tesla is completely oversold. The MACD is red. So what I'm expecting is we're going to go into this next bear market. SPY is probably going to make new lows. QQQ is going to make new lows. It's going to go up, down, chop, get in the chop block here, and then possibly, depending on if we capitulate or we rise, because I don't know what's going to happen. We'll have to see how the conditions look then. This is either going to go break to the upside or break to the downside. We don't know. But Tesla is volatile right now. And even if you look at its 52-week range, Tesla was at $400 at one point this year. And you look at the 200-day moving average is at $258. So it's in a, bear trend, downtrend. It's a massive sell-off, and I'm going to be looking to load up on Tesla shares soon because it's a great company in my view long-term, and it's at a discount right now. So, yeah. Crude oil, another important thing to look at. So I think a huge reason we're seeing slower inflation, or quote-unquote slower inflation, is because when we got that 9.1% print in June, as you can see over here, look, June 9th, oil, or June 8th, oil was peaked out at around $123. I think we can end up seeing those prices again. It's been nothing but down ever since. It's still in a downtrend, but the MACD is green. And I think if we just see it, realistically, it has to break past this $93 level. And if we see that, I think the whole sentiment around CPI, because oil prices dictate basically all prices around the economy. Most people don't know that, but that's true. So the whole sentiment around CPI has peaked, or inflation only has to go down, I don't think that's going to last, guys. And I think Biden did a lot of this so he could get reelected for the midterms, but he can't do it forever. And if you look at the strategic petroleum reserves, which he's been draining at the speed of light, you guys got to realize when you drain petroleum reserves to increase the supply of oil, it's going to bring the price of oil down. It's just simple economics 101. And he's been doing that at the speed of light. That is why, ever since June, you've seen the price of oil go down. But this is technicals, and like I said, we trade charts, not news. He's done. He can't be doing it much longer. But the charts are going to tell you that. So if we see these levels break, even this one, because this is where it failed last time. It has to break that too. But if we see the $93 break, which I think we will eventually, then oil has nowhere to go but up. And we could revisit this 120 level. Very important index here. The next two charts I'm going to show you guys are very, very, very similar because they're both very equal in importance. So this is the dollar relative strength index of the dollar. It's back in this level, this chop block. It's fighting this level again. It made you think it was going to go lower. That was the CPI day, and then it faked out because obviously that's CPI day. Obviously, the market went down right away. And when the market goes down, the dollar goes up. So if you see this breakout over here, then the market's going to tank. If you see a breakout over here, the market's going to rise. And this is obviously such a chop block because, one, we're right near the 200-day moving average, which dictates where the trend is going. And it's been above the 200-day moving average all year. But you can see this is a point of resistance over here, point of resistance here, and a point of support here. So this 104 to 105 level is huge. And we'll see what the dollar does in this level. The MACD is green. That's showing positivity. And I can't draw it out, but there you can clearly see some bullish divergence over here with the, look. RSI is that low, and then it went down. But it went up on the RSI, and that's bullish divergence. So if I had to guess, I would bet on the dollar going up, meaning the stocks go down. I was telling you guys stocks were going to go down because that's what the charts were screaming to me, but it's not clear as it was before because now they have gone down. And so this is the 10-year yield. This chart is very similar to the dollar. If we see it spring up, that's going to be bearish for stocks. If we see it spring down, it's going to be bullish for stocks near the 200-day moving average. Point of resistance here, point of support here. So we'll see what happens in this level. If it breaks to like 3.6, 3.7, and then just keeps going, guys, you guys need to keep an eye on this as well because this yield, the higher it goes, the more screwed our economy is. This is deeper than your trading profits. I mean, if this thing goes high, if this thing reaches 4, 5, 6%, we're going to be looking at civil unrest in the streets. The entire debt market will just implode in front of our eyes. It would be biblical scale starvation. It would be disgusting. Just not good. And whose fault is that? Well, we already know it's the bankers. It's Jay Powell, the guy that make you want he's an actor. That's all he is. I guarantee when these guys look for central bankers, they're hiring actors. That's about it. Oh, act like you care about people. It's disgusting what they do. It's truly gross. It's sick. It makes me sick to my stomach. But anyways, QQQ. Don't know why we got off topic there, but we did. So this gap is going to get filled. This was, what day was this? Oh, yeah, this was the CPI day that announced the CPI numbers for October when we got 7.7%. And the market, it went up like 7% in a day, which is nuts. But that gap's getting filled. So all those if you buy here, because like, oh my God, the market's going up. Well, guess what? You're negative now. So, good job. But you got to trade technicals, guys. I mean, we were here. I was telling you guys the market was going to go down. Okay. People listened, people didn't. I don't really care. Then this happened and the market soared up at open because inflation was 7.1%. And then I didn't flinch an eye. Because I'm like, okay, you didn't break out of that potential bull flag yet. And look, I'll show you guys the bull flag. So this was the bull flag. You got this, you got this, you got that. Okay, potential bull flag here, but it didn't break it. Like it was still on the line. So I'm confident. I'm like, God, the charts are screaming red and it's red. And it went the entire day, it just went down. And then down, down, down. And now we're getting that gap filled, which is amazing. This is exactly what we need. Guys, I want the market to go down. We need to suffer right now. I don't want inflation. I want deflation. That is what's best for people. You're going to suffer. Tough luck. You would suffer even more if we get hyperinflation. You know, like, this is good news, guys. This is good news. I mean, I think the economy's screwed either way. I mean, most people that are not buying gold or silver or Bitcoin or XRP or anything that isn't your dog shit fiat currency are done. They're toast. And that's hard to hear, but like, get some gold, get some silver. See what gold and silver are trading at. See, I knew this was going to happen too. Silver is down 1%. I'm going to look at this right now. I knew because this is overbought. This was overbought. The RSI was screaming overbought. And now the MACD turned red. So silver is probably going to go down. And that's going to be... Watch silver. Wait for silver to go down and buy. Buy some. Go to your local bullion. Go to your local bank. Even though they're thieves, they sell something that's valuable, which is silver. So go buy some silver. Wait. Watch it hit like... I guarantee you guys, you'll see silver hit 21.90. Around there. Around here. And you'll be able to get it at a pretty nice price. Premiums are through the roof, though, because there's such a short supply. But if you think the supply is short now, just wait until the shit actually hits the fan and your dog shit fiat currency goes to zero. So let's move on to some news, guys, okay? Layoffs are on the rise, but nearly 50% of workers are still looking to quit in 2023. Okay, obviously layoffs are on the rise because the economy is weak. Weak! It's suffering, and there's not much hope, if I'm being honest with you guys, for the economy. Companies are going to be making less money, and plus these meta workers ain't doing shit anyways. They just have coffee breaks and play with their dogs and whatever, you know. So these meta workers quitting. Look, guys, I think this whole like people want to quit thing is a lot more like of a psychological thing than it is an economic thing. I think we are just so caught up in Western society, so addicted to instant gratification and pleasure, and that is ironically way worse and way less pleasurable than a life that has less pleasure. It's like less is more, guys. You can't just, like, what else do you want? People in China are out here working for $1 a day, and y'all are quitting because what? You're making 80,000 instead of 100,000. Get out of here, guys. You can't. Like, this is whatever. You're gonna get laid off anyway, so it's not. I don't care. Buy silver. Start businesses. Start selling things. Right? Johnny Bravo, we love you. Okay. Wall Street Journal. U.S. stocks fall as investors weigh recession risks. I mean, like, duh. There's recession risks. It's not even a risk. We're in one already. People are getting laid off. GDP growth is negative. There's supply chain problems up your eyeballs. Like, what else do you want? Like, guys, they're not going to say it was a recession until we come out of it, if we come out of it. This recession, or depression as I like to call it, is gonna end two ways. Either way, either they're gonna pivot too early and we're just gonna hyperinflate into oblivion, or they actually let this thing ride out and the debt market implodes and we get civil unrest. Every bank that you can think of goes bankrupt because they're supposed to. They're literally made out of fake money. That's all it is. Goldman Sachs, UBS, Bank of America, all these banks. Thieves. That's all they are. They're thieves. Inflation is theft. Money management, fund management, theft. They're stealing your money. They don't even know what they're doing. They're brainless. Whatever. Look at it. Morgan Stanley's creature here, Wilson, says U.S. profit could rival 2008 era. Rival? It's gonna demolish it. Look at the money. Look at the M2 money supply compared to 2008 or compared to now. It's not even close. We're gonna this US profit drop is gonna make 2008 look like a walk. It's gonna make 1929 look like a walk in the park. Guys, you can't make this up. They're like slow because they know it's coming. Like, they're not gonna sit here and say like, oh, the economy's doing great, but they want to make you guys as hopeful as possible. And they're gonna say could rival. It's not going. It's going to destroy 2008. It's much worse than 2008. This is the hyper bubble unlike I've ever seen. The car market is in the hyper bubble. The housing market, the stock market, the bond market. The bond market is in a stupid bubble. And that's the biggest market we have. If the bond market goes bust, that's the end game. That's when they can bring in their new system, because everyone is going to be broke and you have to go with their solution whether you like it or not. Home builder sentiment plunges in December for 12th straight month. Duh. Like, are any home builders out here? Do you guys know any home builders? They're pretty common out here. I know a couple of home builders. Do any of them say like, "Oh yeah, I'm busier than ever"? No, interest rates are going up. No, the only reason they were so busy is because interest rates were down, and homes and real estate is in the biggest bubble I've ever seen in my life. You guys, this is common sense. This is economics 101. This is easy to understand. Confidence among builders in the U.S. housing market unexpectedly. Oh my God! Look at this, guys. They really used the word unexpected. Who wasn't expecting this? Who? I want to meet someone. I want to meet the economist that was not expecting home builder sentiment to fall. I really do. You can't make this up. The National Association of Home Builders / Wells Fargo Housing Market Index, which measures the pulse of the single-family housing market, fell for the 12th consecutive month. Guys, this is what happens when interest rates rise. People can't afford mortgages. The people that do have mortgages or are on adjustable or variable rates are probably already toast. And people have their credit cards maxed out, so they can't breathe anymore. Like, I don't know. People just Swiper. You know, like, we need Dora's enemy, Swiper, to go to all these credit card people credit card addicts and say swipe or no swiper. Stop swiping. You're paying 18 to 20% interest rates, and they've only gone up ever since. You know, guys, I'm just praying for the best. See this right here? This is what you guys need to get your hands on. Some silver. Okay? This is what we'll do for humanity. If people got silver, if people learned how to defend themselves and feed themselves, because we're going to see famine, then we will be fine. Anyways, love you guys. Stay safe. Help each other out. Buy some silver, buy some gold. Bye.